it was. All right, sorry, my network went off a little bit. It doesn't happen again. All right, guys, let me try and see. Okay, so one of the basic things then was with. Sorry, guys, let me see how fast this network is. So one of the basic things then was I wanted to know how. I wanted to know. It took me a very long time to be able to incorporate SNR with what I trade currently, and that was because I am someone that I ask questions, a lot of questions. So, like I said, I was stuck with direction, storyline, right? For storyline, we say that when weekly rejects weekly, you wait for daily breakout. And from daily, I'm sorry, I'm just, we're still going to, I'm going to get into why we are here. I'm just trying to give you a rundown into my line of thought and why I trade the way I trade. Right, so from storyline, I was running into a lot of problems, right? Because sometimes storyline has changed to bearish, but price is still trying to buy to a point, and I'm just confused about what's going on. So I ask myself, what's then the idea behind storyline if it fails? Okay, so at the beginning of the year, I started to work with time frame. Started to work on time frames rather than focusing on storyline. I just want to know the trade I want to pick now. I want to be sure this is the direction this trade is going to go. Either storyline is bullish, bearish, or not. I don't want to be involved, right? I just want to know, okay, I'm picking a trade now. Is this trade in the right direction? And that was what some of the things I'm going to be talking about. So in today's in this 3 days bootcamp, technically we're going to be looking at Malaysian SNR and Engulfing for today. And tomorrow we'll look at liquidity and imbalance. And on Monday, we'll put all of this together. I'll give you my SOP. I would create an SOP that puts all these two together. Okay. And be able to go very, very far. So now, so Malaysian SNR. A lot of you probably know all of these basics, but we still have to go over it for the sake of those people that are new or that wants to learn Malaysian SNR because I don't know how far this video is going to go. I know a lot of people are going to share it, but it's fine as long as everybody becomes profitable. So yeah, for classic SNR, in Malaysian SNR, we Malaysians believe that support and resistance are the key to making money in the market, right? So I wrote here, support and resistance is the oldest method of technical analysis, and the Malaysian style involves using the line chart to mark support and resistance level. So we say that for support levels, they are usually V's. See, support will be V's, just like we have here. So there's a V, there's a support level, there's a support level. So support will be V's, while resistance will be A. See that A is A, also A. So this would be a resistance level, and V's would be support level. So let me show you a quick example of what I mean. Alright, so line charts. What I do is my line charts and the candlestick are my favorite on TradingView. So I'm able to easily pick the one I want. Okay, so for the line charts, you said supports are A's, right? So this is an A, right? Sorry, V, sorry. Supports are V. So this is a V, this is a V. The support is also, there's a resistance here, there's an A, there's a resistance here, there's an A, this is a resistance here, these are A's here. Okay, resistance, support, support. So anywhere you get V's, right? Those are support. When you get A's, that's a resistance. And in Malaysian SNR, for proper identification of support and resistance, they've given names to all of these levels. So for example, there is the classic SNR, right? There's the gap level. There's what is also called the HNS, which is the head and shoulder pattern. There's breakout SNR, and then we have engulfing. Okay, and we're going to go into all of these things today, right? So we have to cover all of these things today. And the idea for this is to ensure that the basics are well covered, right? The basics are well covered, right? So I was able to just draw this two guys, but just permit me to be as fast as possible. So after the whole session, I'm going to call. If you have any questions, I'm going to you're going to just raise your hand after the session, and then I'll answer everybody's question, no matter your question. I'm going to try as much as possible to answer. So what's a classic SNR? A classic SNR level is an SNR level where the last support or the last is, how do I explain now? Okay, so it's the last support or last resistance level for price to either buy or sell from. So if it is a resistance level, that means it is the last level for price to sell from, because price would always sell from resistance and will buy from support. Okay, price sells from resistance and then buys from support. So your classic SNR level is the last resistance level that price is willing to sell from. Your classic SNR level that is the support is the last support level, this one that price is willing to buy from. Okay, so an example, let's see example here. Sorry, guys, I have to clean this chart. So let's see this. This is the classic SNR level here. Y, right? This from the line chart. Okay, so this is A, right? So price taps, and why? Because this is the last resistance level within this frame that price is willing to sell from. All right. So another example. Let's see for support. I don't want to take this one, but yeah, let me look for a more conspicuous one. Okay. Support. Right. It's difficult. This difficult. Okay. So the last level that price is okay. Oh, I should have marked the level, but I can't mark that because I've not explained it yet. Okay, so this one, very good level over here. The price taps. See, taps that level. This is an A level, right? A level, price taps, and boom, starts to move. Okay, boom, starts to move. So a support level or a classic scenario as the support level is the last level in a framework where price wants to buy from. All right, so there is also the gap level. Now, the gap level, there's different names for this. People call it the open and close level. Some people call it the kissing candles, which is very, very interesting. So gap levels in a buy market are two buy candles kissing each other. It's just that simple. So we have a buy candle here, another buy candle, and then they're kissing each other. And what's the idea? The idea is that there's an hidden base between these guys. Okay, I'm going to talk about OHLC and then I'll explain that. There's an easy move between these guys, and we believe that what happens is the price will come all the way up and then buy. So it is possible to have a gap level before a classic SNR level. So for example, this is a gap level. You can also have a classic SNR level here. That's why I said classic SNR level is the last level where price wants to buy from. That means you probably had a gap before, so price just beats the gap, something like this, and then comes and maybe something like that. Okay, so your classic level is that last level that price wants to come to. Okay, for sell scenario, right? You have two kissing candles. Okay, I think I drew it wrongly. This should be on the other side. It should be here. Sorry. Okay, so you have two kissing candles, and what do we expect? We expect that price to come back to that level and then sell. And the same way, there can also be a level here. Right? This can be a classic scenario level, right? At this zone. But there's a gap level here. So if price decides to sell from this gap, maybe sometime in the future, it will come back to this last level. But nobody knows, right? So a gap level available. And one of the very interesting thing about gap level is they are perfect on M15 and H1. M15, H1, H4, especially for continuation setups. So gap levels perfect for continuation setups. M15, H1, and H4. Okay. So I'll just be dropping some little hints that I've noticed in the market. So HNS. Other than HNS, there are two types of HNS, right? The first type, we have the left shoulder, you have the apex, and you have the right shoulder. The right shoulder is the entry. Okay. But the difference between this and this is here there's a breakout or there's a break of structure. Here there is none. Okay. There's a breakout here, there is no breakout here. Okay. Left shoulder, apex, and right shoulder. For sell scenario, you have left shoulder, you have your apex, you have the right shoulder. So price can come, tap, and then sell off. Same thing here. Price can come, tap, and then sell off. But the difference between these two HNS is one, this has a breakout, this does not have a breakout. So more often than not, when this does not have a breakout, there's usually a break of structure with a wick. And you'll see it in the market. Okay. So let me show you an example. of HNS and gap levels. Okay, so let's see this week's price action. For example, this is this week's price action. See this is an H1 gap level. Yeah, the price taps, and what happens? Boom, magic. Okay, magic happened. All right, and look for another one. Another one. Usually continuation setups. So you see, there's another one here for sales. See this gap level. So bearish candle in love. Listen, and what happens? Start to drop. Start to drop. Start to drop. Okay. It happens over and over again. Gap levels are very interesting levels. So if you're looking for continuation, you're not sure what's going on, just ask yourself, where's the nearest gap level? See, taps and then drops. Okay. Gap levels, solid levels. Okay. This is another gap level where pricing comes to it. Another gap level, pricing comes to it. So yeah, again, another one here. Interesting. See, taps and what happens? Drops. These guys are in love. They're kissing. Oh my goodness. Candles have a love life. More like something. All right. So again, it's gap level for buys here. Okay. So tap and then magic happens. Compared to HNS. So for HNS, this is a beautiful example. I think this was it this week or last week. Okay. This from last week. As you can see, this is the apex, right? This is the left shoulder, and the right shoulder is the entry. Okay, see that? This is your HNS level. Okay, now this one has a breakout. All right, so let's look for another one. So most times you look for HNS when you're looking for either a retracement or a reversal of the current trend. So for example, we've been bullish all the way, right? And you see an HNS form. So that can be a signal that, oh, maybe we want to start selling. Okay. So it's usually something you look for when you're in retracement or when you are looking for a reversal. So for example, retracement is what you have here. See this one. See that level. Very beautiful, right? So you have this apex, sorry, left shoulder. You have this apex and then entry. Okay. So that taps beautifully and boom. Is it a reversal? No, this is just a retracement into level to continue to the upside. All right? Because there's already a breakout structure here and there's MSC already. So this is retracement to the upside. Okay, so which other example? Let's see. Is this an HNS? Well, some people can argue, yeah, this is another beautiful one. Now, oh, don't let me show this because I will get a lot of questions on that. But let me look forward to simple ones. I don't want to complicate things. It's very simple ones. So HNS. So like I said, when you're looking for reversals, it is yeah, beautiful, right? So there, you have your left shoulder, you have your apex and entry. That's HNS, right? Tap and boom. Okay. The next SNR level is breakout SNR. Now, breakout SNR can be three types. Is either your classic SNR as a breakout, or your gap level as a breakout, or your HNS as a breakout. And why is this? This is because breakout shows us that support can become resistance and resistance can become support. So that's why we say SBR and RBS. Okay? SBR, RBS. So let me show you an example. So let's go to live chat actually. So let's look for, sorry guys, live chat. So let's look for a breakout, a proper breakout. Now, what did we say about basket scenario? Okay. Um, uh, Abdulaziz, are you there? I'm asking you to unmute. Someone hear someone's voice.
Yeah,
Yeah, bro,
I'm here.
what's up? Yeah, very good, man. Is this a classic SNR?
Yes,
Good, man. That's classic SNR. Now, this has broken, right?
yeah,
So this is an example of a breakout classic SNR. Okay. So it taps and then moves up. Please don't unmute yet. Just be don't mute yet, sir. So let's see examples together. All right. So another example. Now see this. This is the classic SNR level, right? Do you agree with me?
you have a breakout.
Okay, that's a breakout. Good, man. Very good. Okay, just want to be sure everybody knows the basics. Okay, once you know the basics. So now let's see this another example over here. This is a classic SNR, yeah? This is a breakout. Yes,
Market
right.
estimate.
Good man. Very good. Very good. Very good. Let's look for broken gap. Broken gaps. Broken gaps. Broken gaps. I think there's a broken gap I saw on H1 this week. Right? There's one broken gap I saw on H1. Yes, this one. Beautiful. This is a broken gap level, right? This is a gap level. We expect that price would come here and sell off. But what happened? Breaks out
Market
and boom. Exactly. I like you, Arviz. I like you. I know these things already. That's good. Good. Work easier. Okay, so let's see breakout SNR or breakout HNS. So now for breakout HNS, usual HNS pattern is to have something like this, right? So rather than having a reaction here, right? Rather than having this right shoulder react here and buy, what happens? We break and then price comes back here for entry. Okay, sorry. So we have this is the left shoulder, this is the right shoulder, but there is this is the left shoulder, sorry, this is the apex, there's no right shoulder. The right shoulder breaks the apex, so you get breakout of the apex, and here you have entry on this level. Okay, so let me show you an example. You definitely see one. Sure. Okay, so this is an example here, right? This is an HNS level, right? As is, you agree? Oh, why is this gone? Who else can I mute? Um, Malik, mute Malik. Malik. Hello, Malik. Are you there?
Yes,
Oh, my bro, what's up? So, do you agree with me
my
that is an HNS level?
yes,
Good man, very good. Now we have a breakout over here, right?
yes,
And
left
a
for
retest.
didn't retest. Yes, retest and
Exactly.
then sell off.
Exactly. So this is an example of a broken HNS. Okay. So I said breakouts can either be breakout classic, breakout gap, and breakout HNS. We can also have breakouts of a BPE, but we've not got into BPE yet. So when we get there, we'll cross that one. Please, Malik, don't mute your mic. I like to hear someone's voice. Sorry. So so yeah. Now let's go to OHLC. I'm trying to make this fast so I can answer questions and I can cover a lot of ground. Now let's go to OHLC. Now for OHLC, I have a picture here. I got this picture from an ebook from this group. There's one group like that, sure. I got this picture from. Now, whenever any candle opens, right? Any candle that opens, we believe that there is an open of a candle, a close of that candle, and then the high handle of that candle. So let's assume this is a candle right here. So let's put this on the line. Sorry, Malik, can you see my trading view?
Yes,
Good man, thank you. Okay, so if this is a bearish candle. A bearish candle opens high and close lower. So it means we have
okay,
the open here, right? We have the close here. So that's settled. Okay. So what we believe is that when price opens at this point, initially buyers will want to show their hands. And the reason is because we have people who had bought this market initially. So as price opens, they bought and then price comes up to this point. And when you buy, you want to offset your what's called your previous position. So sellers get in at this point and drive the market very low to this low. And sellers are done, right? They want to take profits. What do? They start buying back their options. And what happens? Price closes at this point. So this is OHLC. We believe that for a bearish market, it opens, bearish candle rather, opens high and closes lower. So we have the high and then we have the low. Okay. Now let's see bullish candle. So let's say this is a bullish candle. Let me change the color to be green. Okay. So we have this. Okay. For a bullish candle, it opens lower opens at the lower point and closes higher.
Closes at
Why?
high.
Because exactly, good man. It opens lower and closes higher. Okay, so we have opening candle, price comes to the low and then goes high and close here. Okay, and the reason for this is very, very important, right? One of the reasons when we learn things, we want to know, oh, why am I learning this thing? And we'll see that when we start to talk about BPA. Now, in this scenario, see the same thing we've talked about. So price opens at this point. This is a bear candle, right? So opens high, right? Comes all the way down, closes at this point, and creates a classic SNR level here. Okay. The bullish
Yes.
candle opened here. Thank you, Jerry. Comes this low and then this high and the close is here. Now, between this candle, this close and this close, we have something. Between this close, sorry, and this open, we have something. We have a high influx of buyers at this position. A lot of buyers are here. So more often than not, if price is going to continue, first price will make a direct pullback to the opening of this previous candle, bounces off. Price can now decide to come here and go, or even come to the classic before going higher. There is usually a direct pullback trade after this breakout because this candle is a breakout of this previous open. Okay, the same thing in this scenario, right? So we have buy candle opens low, closes high, trades basket SNR. Sell candle opens high, closes low, creates breakout, creates a sell import between this open and this close. For direct pullback, price would come to this open, continue. Direct pullback, right? Direct pullback. Notice the word direct pullback. There are different types of pullback, but that's not for today. So for direct pullback, price would tap and then probably start to sell. So later on, price can do like this or even come to the classic SNR and then sell off. All right. So typically that's what we have here. So for bullish candle opens at this point, goes low, comes high, close here. Bearish candle, the same thing happens over and over and over again. Okay. Same thing here. So from OHLC, we come to engulfing. Now, engulfings are the singular most powerful thing on the chart. So when I started learning SNR, I learned SNR first, then I learned the engulfing part of SNR. And then I was like, oh, engulfings are just SNR level, right? A bearish engulfing is a resistance. The difference between a bearish engulfing and a normal trend line is that a bearish engulfing has two areas where it can sell from. For example, you can sell at the previous open of the buy candle, or you can sell at the classic SNR level. So price can decide to sell from here for a bearish engulfing or sell from the last level. And remember I said the classic SNR level is the last resistance in a sell zone that price wants to sell from. In a bullish scenario, your classic scenario is the last support that price wants to buy from. So for this engulfing, price can either decide to buy from here or buy from here. You don't dictate where price will buy from. Price chooses where he wants to buy from. Okay, so that's the difference between normal SNL and this. So that's why when we mark engulfings, we try to mark them week to week. This week is also part of candlestick. So you mark week to week, please. Week to week. Okay. So again, we mark week to week. Low to high all the time, low to high all the time. Okay. So mark low to high, low to high. So there are different types of engulfing, different variations. So let's see. This is also what's it called? A picture from a particular PDF. So this is a bearish engulfing, right? Like we said, we have buy candle, bearish candle. So the bearish candle is swallowing the previous candle, right? This is a bear candle, swallows it. Boom. Bullish engulfing, the bullish candle swallows the bear candle. Boom. And at the same time, you will see that there is some sort of inducement below the low of the previous candle. So what does that mean? See, look at this. Sorry, let me take this off. Look at this. This particular candle, the eye swept the eye of the previous buy candle for bearish engulfing. For bullish engulfing, the low of the engulfing candle swept the previous low of the previous bearish candle. Okay, So this guy induced slow for bearish engulfing. This guy induced this high for, sorry, this guy induced this low for bullish engulfing. This guy induced this high for bearish engulfing. Oh, geez, what's going on? Sorry, guys, this is supposed to be a pro account. What's going on? All right, let's see. If it ends, I'll have to check again. It's supposed to be a pro account. I don't know. It's telling me 10 minutes more. All right, so let's see how far we can go. If we, when the meeting dies down, I'll try to see what happened. But I cleared it off. Sorry, let me check. Sorry, guys, let me just check again. Oh, sorry, I'll have to stop sharing my screen so you guys can see my credit card details. Oh gosh, what's going on? It's taking so long. Okay, let me just continue. When it's done with it. All right, so these are different types. Now, this is a different variation. Now, for this is the classic engulfing. Now, these other ones are just different variations. Now, for this one, you will notice that the eye did not take out this low. Sorry, the eye did not take out the previous eye. This low actually did not also take out this previous low. So more often than not, this is the strongest, right? This guy is the strongest. Okay, so let me see this. Let me see this. And then the other variation is this type, where you have 3 candles or even 2 candles swallowing up a whole candle. So 3 candles can swallow up a whole candle. And this type, you see 2 candles, this guy swallows it up. This is a different type also. This is a different type. And so far, I think we've been able to cover classic SNR levels, gap levels, HNS, breakout levels, OHLC, engulfings. Now, so one of the biggest things that I use, the EFG. Okay, the EFG. So I don't know. I'm hoping this is not going to stop us anyway. So let's see. For the EFG, it is very, very important. And I want you guys to pay attention here because more often than not, people miss out on this. So the EFG, oh shit, no, not you, not you. So there are 2 types of EFG. Okay, EFG. So we have the first one, we have the 3 candle type, and the second one is the extended type. Now, the 3 candle type is what you commonly see, is very, very popular. And the EFG is perfect on M15 time frame, M15 H1 time frame particularly. So perfect. Is very good for continuation. Okay, if you're looking for continuation, it's very, very good. All right, so for example, you can have this candle, maybe there's a bullish candle here, right? So this is a bullish candle. This guy is a bullish engulfing. Okay. Sorry, somebody should unmute. So can I unmute now? Let me unmute. I have a friend here. Let me unmute this guy. My friend, Dukesh. Sorry, Dukesh, can you unmute? Are you there? I just want to be sure everybody's following actually. Okay. Hello, bro. Can you hear me? Okay, Tayo. I'm on Tayo. Okay, good.
Hello.
Oh, so yeah. So you agree with me that this is a bullish engulfing, right?
Yes.
Bullish engulfing. Okay, very good. Thank you. So at the same time, you can now have another engulfing come all the way like this. Ooh. You must have seen this in the market a lot of time, and I'm going to show you on the chart. Now, this is what I call the EFG. Why is it an EFG? This 2 candle is a bearish engulfing. This 2 candle is a bullish engulfing, right? Bullish engulfing. The moment this candle breaks this candle, it means this bullish engulfing has failed, right? Is that correct? That's correct, right? You guys are following. I'm just going to be sure you are following. Okay, thank you. So the moment this guy drops this at this instant, that means the bullish engulfing has failed. So we have a breakout. It means this support has failed. This is supposed to be a classic SNR. It has failed. There's now a breakout to the downside. This is the three candle type. Okay. Kelechi, can you please stop and get on the chart? All right. So another example is something like this. So you have this. So this is a bullish candle, and then so you have this something like this. This is a bearish engulfing, beautiful bearish engulfing, and suddenly you just see another candle. Comes to cover it up. The same logic. This is now a bullish engulfing. This was a bearish engulfing. Now it is an engulfing field. So price more often than not can come this way and bounce up, can come this way and bounce up. And notice the time frame I said. I said it is very good on M53 and H1 time frame. So let's see gold, for example. Let's see. Network is gold into us. I don't want to use the same chart, so of going on. So this thing was 215 seconds. Okay, let's see. You should see an example on E. So, anyways, because this thing is not going name challenge. I just like gold so much. I feel betrayed sometimes when I trade here. Oh, finally. So that's so Saxo. So yeah, Saxo. Thank you, Saxo. EFG. So this is M15. So I said it's very common on the M15 chart. So see a very good example here. So this is an engulfing field, right? And see this is an engulfing bar. So when price came, what did it come to? Week to week, right? Never forget. Price taps and then starts to buy. Okay, EFG. It's very common, no, but you'll be surprised that it works like magic actually. I'm not even going to see you guys. So there was one, which day? Yeah, I saw one here. So look at this one. Now, do you guys agree with me that this is a bullish engulfing? This guy is bullish engulfing. So what happens?
Yes.
Suddenly, thank you, bro. This guy drops, and this becomes a bearish engulfing, right? There are more reasons why this sell is necessary, but again, this EFG just taps and then starts to sell. Okay, all right. Let's see another example. So this. Oh, this is not an engulfing buy. I would have said it's an engulfing buy, but no, it wasn't. So this is out of the question. Let's look for another example. This is an example, good example. Okay, so this is an engulfing sell. You agree with me? And then you have this engulfing buy. So what happens? Price stops, but induces, and then eventually breaks out. Probably is a bad example, actually. But just to show you how it works. So this is theory candle type, okay? Just to be able to identify it. So that's theory candle type. Let's see more examples. This should work like magic. I'm not even going to hide. But let's see another one. Let's go to each one. Maybe we'll see some more good examples. Oh, brilliant. This is a good one on the H1. Okay. So see this is a bearish engulfing, right? And then three candle type breaks, and you have this guy. The price taps, blasts off. Price comes back again in the future, induces, and then broke. Okay. We'll talk about this structure later today, actually. So this is the three candle type. Okay. Another example is this one, the three candle type. So this guy was here, right? Bullish engulfing, you see price became bearish, price came back to it, got some sort of rejection, and well, price didn't actually take it out at the end. Okay, and drop. So three candle type, very interesting. Okay, now the extent